Hello, my dear learners. How are you all? Hope you all are doing great. I'm Swathi, and today I'll be taking up accountancy made easy and interesting. Are you curious to know what and all we'll be going to learn today? Then quickly come and join me in this session. First of all, I'll be introducing you to the agenda about entire things that we'll be covering up today. First of all, I'll give up a brief information about myself and then we'll move on to the main subject matter. Here we'll be covering up the content along with the timeline, that is all the chapters that you'll be learning throughout this subject if you are a fresher to this subject. And then if you have chosen commerce, then yes, my dear students, you have made a good decision. You have an ample opportunity in this field, and I'll be telling up a few about what are all the fields you can join. Then we'll be going in deep about the subject. We'll be discussing about the basic information of this accounting, where we'll be covering history, definition, double entry system of bookkeeping, as well as the five best elements of accounting. By the end of the session, we'll be discussing the summary, that is what we have gained from this session. Okay, are you interested already? Then quickly let's get started. Here are the contents of this subject matter. If you are a fresher to accountancy, then these are all the chapters which you'll be learning in your 11th standard, or what we call as first PUC in some of the states. Like I am from Karnataka, so here we call it as a first PUC, that is pre-university. Okay, so the first chapter is Introduction to Accounting. Under this chapter, we'll be learning out the meaning of accountancy, what are the objectives of this accountancy, the role, and few basic terms which we'll be using in this entire accountancy field. The second chapter here will be discussing about theory base of accounting. Under this theory base of accounting, basically we'll be learning about the recording of the entries. If you are going to record these entries, how will you record it? What are all the rules that govern this recording system? The major rules that governs this recording system is GAAP, generally accepted accounting principles. And after that, there are a few rules which are known as concepts and conventions, and also the accounting standards that are giving us a framework to this accounting. The third chapter will be actual recording of these transactions, where we'll be writing down all these transactions in certain books. The books namely journal, ledger, purchases and sales book, as well as a cash book. Moving on to the next chapter, chapter 4 will be bank reconciliation statement. Here we'll be learning what are all the need for this reconciliation and how do we prepare this reconciliation statement. The fifth chapter will be trial balance and rectification of errors. We'll be learning out the meaning, objectives, significance, as well as how do we prepare, what is the format of this trial balance, and if at all we have made any mistakes or there are any errors in this accounting system, how do we rectify it? First of all, how do we find out those errors and how do we rectify it? The final chapter we have is depreciation, provisions and reserve. Depreciation is a reduction in the value of asset over a period of time. How does this happen and how do we measure it are all taught in this chapter. And what are all the provisions which we have to govern this depreciation? If we have any reserves, are there ordinary reserves or special reserve? All these things we'll be discussing under this chapter. So you have total 6 chapters. Let us quickly get started. Before starting with this chapter, I'll be giving up a little brief information about if you have chosen commerce. That's an interesting field. You have ample opportunity here. What are all those ample opportunities? Let us see. You can get into banking field, my dear learners. You can get into investment. You can get into insurance. You can get into stock market, that's the capital market. You can be an accountant or a taxation. You can be a chartered accountant or a company secretary. You can get into cost accounting as well, or you can get into any certified financial planner. That is a quick brief about the opportunities that you have, and you are free to join into any field that you want. So let us quickly start with this today's session. Accountancy. Before we learn about accountancy, we have to understand the history of accountancy. How did it originate? Well, my dear learners, the simple accounting framework has been mentioned long back throughout in the Christian Bible as well as in the Quran as well as in the Arthashastras. But in the modern field, if we want to talk about Mr. Luca di Pacioli, he is also known as the father of accounting system. He has mentioned the certain accounting frameworks as well as the accounting terms and the format of this accounting in his book Summa de Arithmetica Geometrica Proportionate Proportionalita. It's a tough word, but you'll get to it usually. Okay, he has written this book in 1494, and in this book he has specially mentioned about accountancy, the frameworks, the rules and the regulations, because earlier days the people did not know how to calculate their accounting system and there was a lot of chaos. So in order to reduce this chaos, he introduced this accounting system and he has specifically mentioned 21 pages in this accounting book. Okay, let me introduce you to this personality. The person here is Luca di Pacioli, the father of accounting. And in order to be specific, in India, we have Mr. Sri Kalyanam Subramaniam Iyer, who is known as the father of accounting in India. He has given up a pioneer and he has given up a start to accounting framework in India. So, this was all about the history of accounting. Let us quickly dig into the main topic of accountancy. Before you understand about accountancy, you have to learn about the definition. I need not say that you have to by heart this definition, just try to understand it. This definition in particular has been given up by the American Institute of Certified Public Accountants. What do they say? They say accounting is an art. We have heard from long back that accounting is an art as well as a science, because here we use the formulas and formats like in science, as well as we use the mindset and skill of an individual to framework this accounting system. That is why accounting is science as well as it is an art. Here they say accounting is an art of recording, classifying, and summarizing in a significant manner. This is very important. You are recording the transaction, you are classifying, and you are summarizing. But how are you doing it? You are doing it in a significant manner, in a systematic order. And all these transactions should be in terms of money. If they are not in terms of money, then it shall not be recorded in accounting books, which are in part at least of a financial character. That means there should be a finance aspect recorded in this transaction, which interpret the results to the final customers. Hence, this definition has been given so clearly and accurately. If you did not understand this definition, learners, then let me explain it clearly to the next slide, that is the process of accounting. I have said accounting is an art where we record the transaction and we get into the classification and summarizing. But there are not only three steps, but there are total five steps under accounting. What are all those? The first step is identification. We have to identify the transactions which are in monetary terms. What are all the transactions which are having a monetary value in cash? That is in cash. After identifying those transactions, we record those transactions. Where do we record it? We have n number of books. The first and the foremost book is a journal. Journal is where we record the entries for the first time, and from there we post those journal entries in a ledger. From the ledger it goes to trading and profit and loss account. From there we go to the trial balance, and from the trial balance we go to the balance sheet. But in order to support these financial statements, we also have other books like purchase book, sales book, cash book, etc. Okay, after recording, we'll move on to the third step, that is classifying. We classify or segregate the entries and we group them into like events. For example, if there are any transactions which are relating to any expenses, we group them under one head. If there are any transactions which are giving us an income, we group them in other head. And likewise, we group them and keep them aside. After keeping them aside, we move on to the third step or the fourth step, that is summarizing. That is, what are all my total expenses that I have made in this academic year or in this financial year, not academic year, in this financial year. And what are all the revenues which I have generated in this financial year, that I'll sum up. And finally, I'll prepare my balance sheet and I will interpret. Why balance sheet is prepared is interpreting, that is communicating the results, whether I have made any profits or whether I have made any loss. The users are keen to understand the information about the company. That is why I prepare this financial statement and I interpret my information to the end users. Okay. If you have understood this, then let me quickly tell you, you cannot just write down this accounting as and how you like. There are certain rules and framework. Because if I decide to write my own accounts in my own wish, then how will I compare my growth with the other company? The like-minded companies will run accordingly and will be getting into comparison only when they follow a systematic accounting system and systematic accounting rules. That is why Mr. Luca Di Pacioli has written his book, and he has mentioned specifically about accounting in his book, and he has mentioned that every transaction has two effects, which has equal effect as well as opposite effect. That is known as double entry system of bookkeeping. Here we have two aspects, my dear learners. The first is the debit and the second is credit. Now please don't confuse that debit is always plus and credit is always minus or the opposite. It always has two effects and it will be shown one aspect in debit and other aspect in credit. It need not be always plus and minus. It always is a depiction of the transaction that it has two effects. And this also will be used in our modern equation, that is asset is equal to liability plus equity. Then what are all these new terms that we are going to learn? It will be explained in the next topic, that is the 5 elements of accounting. Let me tell you, my dear learners, that accountancy is covered by this foremost 5 elements of accounting. If you make your base strong, then accountancy is not a tough subject at all. So, what are all the 5 elements of accounting? Are you ready? Let us start. The first is asset, next is expense, next is liability, capital, revenue. You need not go in the same order, you just have to remember that there are total 5 elements of accounting. What are all these 5 elements? The first I said is an asset. Asset is a resource. My dear learners, asset is a resource which has owned or which has been controlled by the company. You just have to concentrate on this word, that asset is a resource which is owned or controlled by the company. It has been generated out of many future economic events, and it also will generate future economic benefits to you in the near future. Assets may be classified into current asset, fixed assets, and so on. Before this, it can also be classified into tangible asset, intangible asset. To be specific, I'll be giving you an example that tangible assets are those assets which you can see, touch, or feel. Like if you have a furniture, it is a tangible asset. You can see the furniture, you can touch the furniture, you can feel the furniture. And for example, goodwill. Goodwill is an intangible asset. Goodwill is the reputation of a company. If you have started a company for around before 10 years, that means you have made a good name in this business. That generates goodwill in your name, and that goodwill is an intangible asset. You cannot see it or touch or feel that asset. That is why assets are classified into tangible, intangible, fictitious asset, and to be more specific, we carry on current asset and fixed asset for our reference. The next category is liability. Liabilities are those elements which are the claims or what a company owes to a other party. That is liability. Liability again can be classified into current liability or fixed liability. Here if I say loan is a liability or bills payable is a liability, all these things are liability. That means a company after a certain period of time has to give back that resource to someone else. Okay, my dear friends, the next element is revenue. Revenues are the income. We perform our operations of the business on a day-to-day basis. That means if we are performing these operations and if we are making our sales, we are generating some amount of income from that sale. That specific income is revenue. And this revenue is our third or our next element of accounting. Under revenue also we make a segregation that we have operating revenue and non-operating revenue. Operating revenue are those which we get from the day-to-day activities of the business, that is it is regular in nature, and non-operating revenues are those which are not generated out of the day-to-day operation, that means they are not regular in nature. The next expense, that is the next element is expense. Expense is If we want to perform the operations, that means it incurs cash, and that cash is the cost that we give to generate our revenue. So the cost that a company incurs to run its business over a period of time is an expense. Under expense, we make the category like operating expense and non-operating expense, but we have one more category, that is the cost of goods sold. That is, while selling the goods, we incur certain cost, and that category is cost of goods sold. So we have covered total four elements of accounting. The fifth element is owner's equity. Owner's equity. So, if I am the owner of the company, what is my share in this company? That will be determined from this owner's equity. So, owner's equity is the remaining part of the asset that I have in my hand after paying out all my liabilities. Here, my owner's equity, that is my equity, can be determined out of my stocks or my retained earnings, that is the earnings which I have kept in me after paying out all the liabilities. So I hope it's clear. We had total five elements of accounting. The first being asset, liability, revenue, income, that is revenue income, and then expenses or the cost. And the last one is owner's equity. So I hope you have understood everything. I have given you a just brief information about accounting. To sum up, I'll be just quoting up a few words about Warren Buffett. He says, accounting is the language of business. If you can speak this language, it is not difficult at all to win the game. If you can't speak, it is difficult. But if you can speak, my friends, I tell you, it is not at all difficult. So, thank you for patiently listening to me. I hope you have gained a few knowledge about this session and a brief information about accountancy in a subject as a whole. We'll see you in the next class. Thank you.